Given the price history and forecast for Bitcoin, a short-term investment strategy appears to be more appropriate. The recent price fluctuations suggest volatility in the market, and the forecast indicates a potential downward trend in the coming week. Therefore, a short position on Bitcoin is recommended. The entry price should be around $62,800, which is close to the recent high but below the resistance level. The stop loss should be set at $63,300 to limit potential losses if the price unexpectedly rises. The target price could be around $60,700, aligning with the support price and the downward trend indicated by the forecast. This strategy aims to capitalize on the potential price decline, while managing risk through a well-defined stop loss. Based on the provided information for Ethereum, a cautious investment strategy with a short-term perspective appears most suitable. The 2-week price change demonstrates a downward trend, with the forecast suggesting further declines. The current price hovers near the support level of $2,351.12, indicating potential for further drops, while the resistance at $2,440.06 might offer a temporary ceiling. The overall bearish sentiment and the forecast downward trajectory make a short position more appealing. Therefore, an aggressive short-term strategy could involve entering a short position at the current price around $2,420. A stop-loss order should be placed at $2,440.06, slightly above the current price, to mitigate potential losses if the price unexpectedly surges. The target price for this short position would be $2,350, aiming to capitalize on the anticipated price decline towards the support level. This strategy prioritizes risk management by setting a defined stop loss, while seeking to profit from the predicted market movement. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its support level of $131.5. The forecast suggests Solana could drop further, reaching $142 in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $144 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $146.53 to protect against any unexpected price recovery. The target price should be set at $135, allowing you to take profits before the market hits major support at $131.5. Given the historical price data and the 1-week price forecast for Ripple, a cautious short-term investment strategy appears most suitable. The historical prices exhibit a downward trend, with the recent price hovering around the support level of $0.5227. The forecast predicts further declines in the price, reaching as low as $0.506 over the next week. This suggests a bearish outlook in the short term, making a short position potentially profitable. For this strategy, an entry price of $0.533, aligning with the recent price and the first forecast price, would be appropriate. A stop-loss order should be placed at $0.544 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.506, the lowest predicted price in the forecast, allowing for profit taking before the market potentially hits the support level. This approach allows for capitalizing on the anticipated price decline, while managing risk effectively. Given the Cardano price history, forecast, and support resistance levels, a cautious medium-term investment strategy is recommended. The recent price history shows a downward trend, with the forecast suggesting further consolidation around the current price levels. The support price of $0.342 provides a floor for potential buying opportunities, while the resistance level of $0.3578 indicates a potential ceiling for upward movement. Therefore, a long position is suggested, aiming to capitalize on a potential upward breakout from the current consolidation range. An entry price of $0.348, slightly above the support level, allows for a margin of safety while still capturing potential upside. The stop loss should be placed at $0.342, the support price, to limit potential losses. The target price is set at $0.3578, the resistance level, aiming to capture the full potential of a breakout. This medium-term strategy allows for some time to play out the price action while managing risk effectively. Based on the provided SU price history and forecast, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations around the $1.80 mark. Forecast indicates continued upward momentum, with prices projected to reach $2.24 within the next week. This suggests a bullish outlook for SU in the medium term. Therefore, a long position is recommended. A strategic entry point would be around $1.80, aligning with the current price and recent support levels. The stop loss should be set slightly below the recent lows, around $1.70, to mitigate potential downside risk. The target price could be set at $2.10, capturing a significant portion of the projected price increase, while allowing for some room for market fluctuations. This strategy balances risk and reward, aiming to capitalize on the anticipated upward trend in SU over the medium term. The provided data for Filecoin suggests a sideways to slightly bearish trend in the short term, while the forecast indicates a slight increase. The historical price data shows volatility with no clear upward momentum. Given this, a short-term cautious approach is recommended. An investment strategy for Filecoin could involve a short position. A potential entry price could be around $3.7, slightly above the current price and near the resistance level. The stop loss should be set at $3.8, protecting against a potential upward price movement. The target price could be around $3.55, aligning with the support level and reflecting the anticipated downward pressure. This strategy aims to capitalize on any short-term weakness in the market while minimizing risk. Based on the provided data for ThetaNetwork, a short-term bearish strategy appears most suitable. The historical price data shows a downward trend, with the current price hovering near the support level of $1.23. The forecast price also suggests a continued decline over the next week, reaching as low as $1.3. Given this downward momentum and the proximity to support, entering a short position could be profitable. A potential entry price for this strategy could be $1.34, slightly above the current price, allowing for some room for price fluctuation before entering the trade. The stop loss should be set at $1.4, safeguarding against unexpected upward movement. The target price would be $1.23, aiming to capture the potential decline towards the support level. This strategy capitalizes on the short-term bearish outlook for ThetaNetwork, aiming for profits within a week. Given the price trends and forecast for Dogwifhat, an aggressive investment strategy would focus on a long-term approach to capitalize on the upward momentum. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $2.44. The forecast indicates further price increases, reaching as high as $2.93 in the coming weeks. This suggests a bullish outlook for Dogwifhat in the short to medium term. Therefore, a long position is advisable to capitalize on the potential for a price increase. An entry price of $2.48 would allow you to buy in before the price potentially surges towards the forecast high. Setting a stop loss at $2.38 would protect your downside in case of an unexpected price drop. The target price should be set at $2.75, allowing you to take profits before the price potentially reaches its resistance level of $2.567, while still capturing a significant portion of the anticipated gains. Given the price trends and forecast for Stellar, a conservative investment strategy would focus on a short-term approach to capitalize on the potential for a slight price increase. The historical prices show a slight downward trend, with the current price close to the support level of $0.0902. The forecast indicates a further decline in price over the next week, but the support level may act as a floor, preventing a significant drop. In this scenario, a long position is advisable, aiming to buy at the dip near the support level and potentially profit from a bounce back towards the resistance level of $0.0923. An ideal entry price would be around $0.0905, aligning with the support level and the forecast's lowest price. A stop-loss order should be placed at $0.0893, slightly below the forecast's lowest point, to minimize potential losses. The target price could be set at $0.0923, the resistance level, allowing for a potential profit of around $2. This strategy allows for a limited risk, short-term investment opportunity in Stellar, aiming to capitalize on a potential bounce back towards the resistance level. Given the price trends and forecast for Starknet, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.3635. The resistance is at $0.3973, indicating limited upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $0.387 would be ideal, aligning with the recent price action and the forecast. The stop-loss should be set at $0.3973 to protect against any unexpected price recovery. The target price should be set at $0.3635, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to minimize risk while capitalizing on the potential for a short-term price decline in Starknet. Based on the provided price history and forecast for Pendle, a short-term bearish strategy appears to be the most suitable. The 2-week price change shows a downward trend, and the forecast suggests further declines. Although the current price is relatively close to the support price, the downward momentum indicated by both the historical data and the forecast suggests that a short position could be profitable. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $3.88. The stop-loss should be set slightly above the current price, around $3.96, to minimize potential losses if the price unexpectedly surges. The target price could be set around $3.65, which aligns with the support price and represents a reasonable profit potential given the short-term bearish outlook. Given the price trends and forecast for render, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $5.234, while the resistance is at $5.701. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $5.45 would be ideal, aligning with the current price and the forecasted price. The stop-loss should be set at $5.65 to protect against any unexpected price recovery. The target price should be set at $5.15, slightly above the support level, allowing you to take profits before the market hits major support at $5.234. This strategy aims to capitalize on the potential for a short-term price decline in render. Based on the provided VeChain price history and forecast, a cautious investment strategy with a short-term perspective appears most suitable. The 2-week price change reveals a downward trend, with the forecast projecting further declines, while VeChain finds support at $0.02209. The resistance at $0.02327 suggests limited upward potential. Considering these factors, a short position seems more prudent. To implement this strategy, an entry price of $0.0230 would be appropriate, aligning with the forecast and near the resistance level. The stop-loss should be set at $0.0233 to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.0222, aiming to capitalize on the anticipated price decline. This strategy prioritizes risk management while seeking to profit from the short-term bearish outlook for VeChain. Based on the provided data for Binancecoin, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a general downward trend, with recent prices hovering near the support level of $541.3. The forecast also suggests a continued decline, with prices potentially dropping to $559 over the next week. This bearish outlook, coupled with the proximity to the support level, indicates a higher likelihood of a price drop. Therefore, a short position on Binancecoin is recommended. An entry price of $560 would allow for entry near the current market price, while providing some room for price fluctuation. The stop loss should be set at $568 to limit potential losses if the price unexpectedly reverses upwards. Target price should be set at $545, aiming to capture a potential price decline towards the support level. This strategy emphasizes risk management while seeking to capitalize on the anticipated short-term downward movement in Binancecoin. Conflux's recent price history shows a fluctuating trend with some upward movement. The forecast suggests a continued upward trajectory, with prices potentially reaching $0.209 over the next week. Considering the support price at $0.1451 and the resistance at $0.2133, a medium-term investment strategy appears to be the most suitable approach. A long position is recommended for Conflux, aiming to capitalize on the predicted price increase. An entry price around $0.175, near the current price and below the forecast high, offers a good starting point. The stop loss should be set at $0.159 to minimize potential losses if the price unexpectedly drops below the support level. The target price can be set at $0.205, allowing for a healthy profit margin before reaching the resistance level. This strategy balances risk and reward, aiming to benefit from the potential upside while protecting against significant downturns. Based on the provided price information for Worldcoin, a medium-term investment strategy appears most suitable. The historical price data shows some volatility, with recent fluctuations indicating a potential consolidation period. The forecast suggests a gradual upward movement, reaching $2.15 within the next week. This suggests a cautious bullish outlook, but the price remains below the resistance level of $2.116, indicating potential for further upside. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $1.90, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $1.85, below the recent support level of $1.82, to minimize potential losses. The target price can be set at $2.10, aiming to capture a significant portion of the projected upward movement. This strategy allows for capital appreciation while managing risk within a reasonable time frame. Given the provided price history, forecast, support, and resistance levels for Avalanche, a short-term investment strategy appears to be the most suitable approach. The price history demonstrates some volatility, but the forecast suggests a relatively stable sideways movement in the coming week. The support price of $24.65 acts as a potential floor for the price, while the resistance level of $26.95 indicates a ceiling for upward movement. Therefore, a neutral to slightly bearish short-term strategy is recommended. We can enter a short position at the current price of $26, with a stop loss set at $26.95 to limit potential losses if the price unexpectedly rises. The target price should be set at $24.65, aiming to capture a potential decline towards the support level. This strategy allows us to capitalize on the anticipated sideways movement, while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend, with the current price hovering near the support level of $0.7434. The forecast suggests a continued decline, with the predicted price dropping below the current level. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive entry price could be around $0.768, aligning with the forecast and allowing for potential profit. The stop loss should be set at $0.7892, slightly above the current price, to protect against any unexpected upward movements. The target price should be around $0.7434, the support level, aiming to capture the majority of the predicted price decline. The provided price data for EOS suggests a potential for short-term gains. The recent price history shows a downward trend, with the forecast indicating further declines. The current price is hovering near the support level of $0.465, which could act as a potential buying opportunity. Therefore, a short-term investment strategy focusing on a long position in EOS appears promising. A suitable entry price would be $0.465, aligning with the support level. The stop loss should be set slightly below the entry price at $0.460 to minimize potential losses. The target price could be set at $0.48, aiming to capitalize on a potential rebound towards the resistance level. This strategy capitalizes on the potential for a short-term price increase while managing risk through a well-defined stop loss. Given the price trends and forecast for TRON, a medium-term investment strategy is recommended to capitalize on the anticipated price increase. The historical prices show a slight upward trajectory, with the current price hovering near the support level of $0.1535. The forecast indicates a potential rise towards $0.157, suggesting a bullish outlook in the medium term. Therefore, a long position is advisable for this strategy. The entry price should be set at $0.154, slightly above the support level to allow for a small margin of safety. The stop loss should be placed at $0.1535, aligning with the support price, to minimize potential losses. The target price should be set at $0.157, corresponding to the forecasted price, allowing for a moderate profit. This medium-term approach allows for capital appreciation while managing risk effectively. Given the historical price data and the forecast for STRK, a cautious investment strategy focusing on the short to medium term appears most suitable. Price has shown volatility, fluctuating between a high of $0.483 and a low of $0.397. While the forecast suggests a potential upward trend, it's essential to acknowledge the price's recent dip and the proximity to the support price of $0.3368. Therefore, a long position is recommended with an entry price of $0.426, aligning with the current price and providing a buffer above the support level. The stop loss should be set at $0.407, point below the recent dip and the next support level, to minimize potential losses. The target price could be set at $0.467, taking advantage of the forecasted upward movement and aligning with a potential resistance level. This strategy allows for a measured approach, capitalizing on potential upside while managing risk through a well-defined stop loss. Given the price trends and forecast for ShibaInu, a cautious investment strategy would focus on a short-term approach to capitalize on the anticipated upward momentum. The historical prices show a recent consolidation phase, with the current price hovering near the support level of $0.0000161. Forecast suggests a gradual increase towards the resistance level of $0.0000181. In this scenario, a long position is advisable to capitalize on the potential for a price increase. For an aggressive short-term investment strategy, an entry price of $0.4 $0.0000173 would be ideal, aligning with the current price and the upward forecast. The stop loss should be set at $0.0000165 to protect against any unexpected price decline. The target price should be set at $0.0000180, slightly below the resistance level, allowing you to take profits before a potential pullback. This strategy aims to capture a small but consistent profit within a short time frame. Based on the historical price data and the one-week forecast for Dogecoin, a cautious short-term investment strategy is recommended. The historical prices show a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast suggests a further decline in price over the next week, indicating a bearish outlook in the short term. Considering this, a short position on Dogecoin is advisable. An entry price of $0.109 could be considered, aligning with the current price and the forecasted decline. A stop-loss order should be placed at $0.111 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.105, slightly above the support price, allowing for profit taking before the price potentially reaches its lower bound. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop-loss order. Based on the provided price history and forecast for HookedProtocol, a cautious short-term investment strategy is recommended. The 2-week price history demonstrates a downward trend, with the forecast suggesting further declines. The support price of $0.4044 represents a potential floor for the price, while the resistance at $0.5044 indicates limited upside potential. Considering this bearish outlook, a short position would be the most suitable approach to capitalize on the anticipated price decrease. An ideal entry price for a short position would be $0.4500, slightly above the current price and close to the resistance level. This allows for a potential price drop towards the support level. The stop loss should be set at $0.4700 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.3900, aiming to profit from a significant portion of the forecasted decline. This strategy focuses on a short-term investment horizon, aiming to capitalize on the anticipated price movement within the next week or two. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility, with a recent dip towards the support price. The forecast suggests a slight upward movement in the coming week, but the price remains relatively close to its support level. This indicates a potential for short-term gains but also a higher risk of price reversal. Therefore, a long position is advisable, aiming to capitalize on the potential upward movement. An entry price around $0.338 could be considered, allowing for a small buffer above the current price and below the resistance level. The stop loss should be set at $0.329, the support price, to limit potential losses. The target price could be set at $0.345, the resistance level, aiming to capture a moderate profit if the forecast proves accurate. This strategy allows for potential gains while managing risk through a well-defined stop loss and a realistic target price. Based on the provided price information for Notcoin, the current market sentiment appears to be neutral to slightly bearish. While the recent historical prices show some upward movement, the forecast suggests a slight decline over the next week. The support price at $0.00772 indicates a potential floor for the price, while the resistance at $0.008413 suggests an upper limit for upward movement. Considering this, a short-term investment strategy with a focus on capital preservation might be more suitable. To implement this strategy, we could enter a short position at the current market price. around $0.00777. The stop-loss order would be placed above the recent high at $0.00802 to minimize potential losses. The target price would be set at the support level of $0.00772, aiming to capture a small profit from the anticipated price decline. This approach allows us to capitalize on the potential downside while mitigating risk by setting a clear stop-loss order. Suncoin. Historical price data reveals a downtrend over the past 2 weeks, with the forecast predicting further declines. The current price sits near the support level of $0.01786, suggesting potential for a bounce. However, the forecast indicates a continued downward trajectory, reaching as low as $0.0178 in the coming week. Given this bearish outlook, a short-term short position appears to be the most suitable strategy. An aggressive short-term investment strategy for Suncoin would involve entering a short position at $0.0192, aligning with the current price. The stop-loss should be placed at $0.0198, protecting against any unexpected upward movement. The target price could be set at $0.0178, slightly above the forecasted lowest price, allowing for profit taking before the market potentially rebounds. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop-loss order. Pepecoin's historical price data shows a fluctuating trend with both upward and downward movements. While the one-week forecast suggests a potential upward trend, it's crucial to consider the recent price dip and the proximity to the support price of $0.0000951. Given this context, a cautious approach with a medium-term investment perspective seems more prudent. Therefore, I recommend a long position on Pepecoin with an entry price near the support level of $0.0000951. A stop-loss order should be placed slightly below the support price at $0.0000092 to minimize potential losses. The target price can be set at $0.0001020, aiming to capitalize on the forecasted upward momentum and reach the resistance level. This strategy balances risk management with the potential for moderate returns in the medium term.